Trader O here, and let's talk about the US dollar. So last week we saw a massive bullish breakout on high inflation data of the US. Um, Actually, that was 2 weeks ago, but it really doesn't matter. What I want to show you is this. Right now, the DXY is trading at a massive level, right? Let's grab the daily chart. After breaking with those pandemic lows at around the 94.60 level or so, we're seeing price being capped to the upside by the 96 level. Now, this is another massive level. Actually, let's go to the 4-day chart or so you can appreciate better what I'm talking about. So, this is and has been a very strong pivotal level in historic price action on the DXY. Just before price broke with the 96 level, this is where we saw some buyers jump in, and of course, midterm short or bears taking profit. Then we saw the same low in June 2019 and a base formed in March 2019 and a high right here July 2018. And if we go further in price action, you can see that this level has been quite pivotal. If we go back to 2014. So, massive level that we are seeing right here now. The DXY closed quite bullish, close above the 96 level. That a very bullish daily candle. And if we go to the lower time frames, right? If we go to the lower time frames, actually on Friday, I traded the long side on the US dollar on this flag breakout on a retest of the previous low. So the bullish structure in this market is pretty much established, right? After breaking up with those pandemic lows at around the 94.60, it's very well established. So next week we will be looking for longs on the US dollar and longs only. Now, where are we going to find those lows? Because if you notice this, the top or the level that capped the upside on the 17th, which was Wednesday, and on Friday it's basically the same. We have a flat top right here at the 96.25 level. So we need to wait and see what the open brings, right? If the US dollar opens higher, I will not be buying it. I will be buying, however, a retest of the 95.85 level or so. Um, Even a deep pullback towards those previous lows at around the 95.60 level is still very much bullish to me. Now, if the US dollar, well, in this case, the DXY breaks with these lows, I will not be shorting, even though we could get a pullback towards that 95.20. But I'm looking to trade the impulses, and right now this market is extremely bullish. Now, where am I going to play this? First market that I'm looking at is the pound against the US dollar. I actually shorted the pound against the US dollar. This was my trade on Friday. Closed half at around 45 pips or 50 pips, and then the other half got stopped out at break even. But in the what I'm looking at is again a continuation to the downside on a very weak pound and a strong US dollar. This is one of my preferred markets to trade a strong move. Or a strong bullish move on the US dollar, given the fact that we are looking at a weak pound because of how dovish the Bank of England came at a couple of weeks ago on the monetary policy report. So this is one of my preferred markets. The other one is the Kiwi against the USD. Again, I do have a short position here, shorted the breakout of these lows held throughout this rally. And what I like about this setup in particular is if you look at the daily, it was a break retest of the 70-80 level. So a strong USD would bring some very bearish pressure in this market, and a break of the 69.80 would be awesome for shorts. Maybe even a break and a retest of this week's lows for at least a retest of September and October lows. So this is my plan for next week. Have a great